All right, let's talk about something that's made people millionaires and completely wrecked portfolios, sometimes in the exact same year: Bitcoin. It's not just an asset, it's a technology, it's a whole movement. But for any investor trying to make sense of it, it's a true double-edged sword.
So, that brings us to the big question, right? Is Bitcoin really the future? Is it the digital gold everyone's talking about? Or is it one of the biggest, most dangerous traps just sitting there waiting for the modern investor? Let's dive in and figure this
You
out.
really don't have to look far to see just how wild this ride is. I mean, think about it. In 2021, the headlines were all about everyday people becoming millionaires, just riding this incredible wave of gains. But fast forward just 1 year, and the story completely flips. Those life-changing gains, they turned into life-shattering losses. And we're not talking about a small dip here. These are polar opposite, life-altering outcomes happening back to back.
So how can both of those things be true? How can it be both the hero and the villain? To get that, we have to look at the promise of Bitcoin. What is the powerful idea that gets so many smart people to pour billions of dollars into it? Let's break down that a little.
It really comes down to these 4 key pillars. First, and this is a big one, fixed scarcity. Then you've got decentralized control, the idea that no single bank or government can mess with it. That leads right into the third point, its potential as an inflation hedge. A lifeboat when regular currencies start to sink. And finally, there's the growing network effect, which is just a fancy way of saying the more people use it, the stronger it gets.
And that first point, scarcity, it's all about one number: 21 million. That's it. That is the absolute hard-coded limit on how many Bitcoin can ever exist. It's not like our dollars or euros that can be printed into oblivion. This hard cap is the bedrock of its value proposition, the reason people call it digital gold.
Okay, but for every amazing promise, there's a risk. For every single argument for Bitcoin, there's an equally powerful danger lurking just around the corner. So now let's turn this thing over and look at the other, much sharper edge of the sword.
This chart says it all. I mean, just look at these numbers. This is pure gut-wrenching volatility. We're not talking about a 20% correction that makes you nervous. No, these are catastrophic, portfolio-destroying crashes in 2013, again in 2018, and then again in 2022, each one wiping out over 80% of Bitcoin's value. Trying to stomach that as an investor, well, it's a brutal, brutal test.
So what's driving all that chaos? Well, first off, unlike a stock that owns factories or pays dividends, Bitcoin has no intrinsic cash flow. Its price is literally just what the next person is willing to pay. The market can also be pushed around by whales. These are huge holders who can pump or dump the price with just one trade. And then you have the constant fear of sudden government rules, or of course, the personal risk of getting hacked.
And this right here, this is a point that you cannot ignore. The Bitcoin network itself, it's never been hacked. It's incredibly secure. But the places where you buy and sell it, the exchanges, oh, they are not. They are companies, and companies can fail, and they do spectacularly. They take all your money with them. Just think about the names: FTX, Celsius, Terra.
So given this incredible promise on one side and these massive, terrifying risks on the other, is there a smart way to even approach this thing? Is there a way to get a piece of the potential upside without risking financial ruin? Let's walk through a framework for what we'll call cautious optimism.
Honestly, the single most important strategy is just this: portfolio allocation. Look at this chart. The smart way to think about crypto is not as your main investment, but as a small, speculative slice. We're talking maybe 1 to 5% of a portfolio that's mostly traditional stuff. This way, you've got a shot at the upside. But if it all goes to zero tomorrow, you're not destroyed.
Now, for that small slice, there's a very clear playbook. First, dollar cost average. You invest small, fixed amounts on a regular schedule. It smooths out those insane price swings. Second, and this is crucial, practice self-custody. Get your coins off the exchanges and onto a hardware wallet, a little physical device that keeps your crypto completely offline, safe from hackers. Third, be prepared to hold for the long term. And finally, the golden rule: avoid leverage at all costs. It's just the fastest way to get completely wiped out.
So, after weighing the incredible promise against the very, very real dangers, what's the final verdict? How should we really think about this powerful, polarizing asset? Well, it all comes right back to where we started. Bitcoin absolutely can be a tool for creating wealth, but it can just as easily become a weapon of financial self-destruction. Its power demands knowledge, it demands discipline, and it demands a huge amount of respect for the risks you're taking. The sword is incredibly sharp, no doubt about it. But whether you succeed or fail, well, that depends entirely on how you hold it.
And listen, the journey does not end here. The only way to wield this sword safely is to never, ever stop learning. If this helped you make sense of the risks and rewards, make sure you subscribe for more deep dives into the world of investing. Keep educating yourself, invest safely, and we'll see you in the next one.